Hello, everyone. Matt Clark, research analyst for Money and Markets, here with this week's Stock Power podcast. Now, today's Power Stock is an oil driller that's focused in one of the largest deposits of oil and natural gas here in the U.S. It scores a 93 on our Stock Power rating system. But first, I do want to make sure that you are checking out moneyandmarkets.com each and every day. Adam, Charles, myself, and our entire team, we work diligently to give you important, safe, sound, smart, simple, adaptable, profitable information for your portfolio so that you can make money in any type of market condition, whether the markets are up, down, going sideways, whatever. We are always on the lookout for investment opportunities for you in any market condition. You can check out my Stock Power Daily. Monday through Friday, I give you one highly rated stock according to our Stock Power rating system that you should consider for your portfolio. You can also use that powerful Stock Power rating system for free at Money and Markets. If you just go to the homepage at moneyandmarkets.com, right in the top corner, you'll see a search bar, type in a ticker or a company name, and you'll be able to pull down a ton of information, including stock chart, fundamental data, company information, any research we've done on the company, plus that powerful Stock Power rating system, all right there at your fingertips for free at moneyandmarkets.com. Now, let's get after it for this week's podcast. Texas is the largest oil producing state in the U.S. There's no question about that. That's kind of a very common thing that everyone really knows. In 2020, the state produced about 1.8 million barrels of oil every single day. But it's the second largest state that produces oil in the U.S. that really surprised me. North Dakota produces around 431,000 barrels, primarily from the Bakken formation of the Williston Basin each and every day. And in today's episode of the Stock Power Podcast, I'm going to share with you a 93 rated power stock that drills for oil and gas right there in the Williston Basin. Now, the reason why Texas produces the most oil is because its vast size. The oil deposits in the West Texas oil fields are massive. Plus, there's offshore drilling in the Gulf that provides even more access to oil. But North Dakota has what's called the Bakken Formation. This is about 200,000 square miles of land that's situated from the western part of North Dakota to eastern Montana and up into southern Saskatchewan in Canada. And the U.S. Geological Survey estimates there's about 4.3 billion barrels of oil and 4.9 trillion cubic feet of natural gas still left in the Bakken Formation. This week's Power Stock is a company that drills for oil and natural gas right there in the Bakken. It's a strong bullish 93 out of 100 on our Stock Power rating system. It just increased its quarterly sales by 100% in the most recent quarter, and it comes with a 4.12% forward dividend yield. Now, oil is used for more than just making gasoline in our cars. It's used for lubricants. It's used for diesel, jet fuel. It produces heat during the winter months. It helps power electricity to keep the lights on. Oil is used for way more than just what we think, and that's gas in our cars. And the chart I'm showing you here shows the global production of oil. At the height of COVID in 2020, production actually dropped off to about 90 million barrels of oil per day. And that was a pretty strong drop off, 90 million barrels per day. That was down from about 100 million barrels we were producing before COVID. Now, the U.S. Energy Information Administration expects that number to grow to more than 101 million barrels per day by the end of the year worldwide. So we're going from 90 million barrels per day all the way up to 101 million barrels per day. That's every single day of oil that's being pumped out of various deposits around the world. And the demand for oil continues to grow. And that means there's a need to produce more and drill for more. And today's stock that focuses on that is Chord Energy Corporation. It trades on the NASDAQ. Its ticker symbol is CHRD. Now, it's a $5.1 billion company that drills for crude oil and natural gas right there in the Williston Basin of North Dakota. It scores a 93 on our proprietary Stock Power rating system. It means we're strong bullish on the stock, and we do expect it to beat the broader market by at least 3 times over the next 12 months. Now, the stock's 12-month momentum is something to speak of, and I'm going to talk about it here in just a second. But I want to highlight the value and growth potential of Chord. Let's start with the value. Chord's CHRD's price to earnings ratio is right now half the fossil fuel exploration industry average, which is pretty impressive. Chord's price to sales ratio, or P to S, is 1.08 compared to the industry average of 1.96, so almost 2. Price to cash flow for Chord is 2.37. The industry average is 3.45. And all this suggests that CHRD is a much better value stock than its industry peers. And now Chord gets even better when you look at it from a growth perspective. Cord's sales, earnings, and dividend growth rates have all been outstanding over several periods of time. It grew sales by 100.8% from the previous quarter, and its 1 year annual sales growth rate right now is 65.9%. So it's growing sales on a pretty strong level, both over the quarter and over the year. Cord's earnings have expanded 108.4% year over year. Its dividend growth is 56% from the previous quarter. And this is why Cord earns a 99 on our growth metric. But let's get into the stock price and that momentum over the last 12 months as well. Now, at one point, CHRD stock gained more than 85% from its low in September of 2021. Broader market headwinds pushed into the stock, forcing it down, giving it a little bit of resistance, but it's still up 52.6% over the last 12 months. And the company's revenue does show some promise for the future as well. The COVID pandemic of 2020 saw a decrease in oil demand around the world and a slowdown of drilling operations. Cord only had about $900 million in total revenue in 2020, but it came back the next year, growing sales to $1.5 billion. S&P Cap IQ forecasts the company's total annual revenue will reach $3.6 billion by the end of next year. So you've got 2020 where it was under $1 billion, about $901 million, and then fast forward to 2023, expectations are for revenue to reach $3.6 billion. That's a 299.3% jump in revenue growth in just about 4 years' time, which is pretty darn impressive. And it shows a lot of strength here in the oil drilling business because oil demand is getting larger, and it's not just about gas. Of course, we use gasoline for our cars, but EVs are making an impact, and we're seeing more and more EVs on the road. It's a mega trend that Adam, Charles, and myself, we follow not just on Money and Markets, but in Adam's trading service, Green Zone Fortunes, which I would encourage you, if you're not a part of, to jump into and be a part of that community as well. We'll put a link up top where you can learn more about joining Green Zone Fortunes. But so EVs and battery tech, battery storage, they are mega trends that we do look at, and they do put a dent in gasoline. However, we've got to understand that there is more use for gas for oil than just making gas. In fact, a barrel of oil can be split 5-10 different ways into different things. You've got jet fuel, which takes a different type of oil, which takes a different grade of oil. There's diesel, which is a different type of grade of oil. Lubricants, which uses a different type of grade of oil. All comes from the same oil, but you have different grades of it within that barrel that are used and siphoned off for other uses. So, demand isn't just on gasoline when it comes to oil. You've got to think of it much broader than that. But because that demand is growing, it also means that we have to drill for more. And it doesn't necessarily suggest that we have to find more areas to drill, because we already have rich areas now: West Texas, Oklahoma, into Western Kansas, and then up into the Bakken Formation, Eastern Montana, Western North Dakota, into Canada. These are areas that still provide a good amount of oil and natural gas available to drill for. So we have to kind of tap those resources before we start looking at other places that we have to look at to drill in order to meet this demand. And with its prospects in the second highest oil producing state in the country, Cord, CHRD, is a great fit for your portfolio. Now, let's switch gears and look at our YouTube poll question from last week. We basically asked if you thought the U.S. economy was heading towards a recession. And an overwhelming 83% of you who voted said yes, the U.S. economy is definitely heading towards a recession. Only 17% said no, we're not really there yet. Now, remember, you can vote in our weekly poll question anytime on our YouTube page. Just go to youtube.com, search Money and Markets. If you're not already there, we have the green bull and bear logo. When you're on our homepage on YouTube, just click on that community tab, and our poll question is right there at the top. Love to have your vote and have your participation. If you have a question about a particular stock or a sector that you'd like Adam, Charles, or myself to talk about, we'd love to do that. You can email us at feedback@moneyandmarkets.com. We'll drop that right down below here because we love to see your feedback. And maybe you're following some of the stock recommendations I've had in our Stock Power Daily. Love to hear how you're doing with that. You can email that same address, feedback@moneyandmarkets.com, and let me know how you're doing. Would love to see that. If we do use your question or maybe some of your comments on any of our upcoming videos on our Stock Power podcast, we're gonna hook you up with some free Money and Markets gear. We've got hats, t-shirts, sweatshirts, all sorts of great stuff. We will hook you up just for asking a question or providing some feedback to us and us using it in an upcoming video. Also, head over to moneyandmarkets.com, sign up for our free daily e-letter. We give you safe, sound, smart, simple, profitable, and adaptable investment information because we want to make sure we're finding opportunities to make money in any type of market condition, whether it's up, up, down, sideways, doesn't matter. Adam, Charles, myself, we're always looking for those opportunities for you in any market condition. And while you're at moneymarkets.com, check out that proprietary stock power rating system tool. It is powerful. You can search thousands of stocks. If you go to our homepage at moneymarkets.com, just in that right-hand search bar, you'll see you can type in a ticker, company name, anything like that. You'll be able to pull down a stock chart. You'll see what the company does. You'll see some fundamental data, any research we've done, and those rankings breakdowns using our 6 metrics to get you that overall, to find out if maybe this is an investment for you or maybe it's one you should stay away from. And all that is available for you for free at moneyandmarkets.com. That's all for me this week. Until next time, this is Money Markets research analyst and host of the Stock Power Podcast, Matt Clark, wishing you all safe trading.